Hi, this is Dave with Market Trading Concepts. It is Sunday, May the 27th, closing out the week for Friday, May the 25th. Now, I've been away for about a week now. I've been away from the markets. I haven't looked at the markets at all in just over a week. So I'll be looking at the market here with some fresh eyes and hopefully some good fresh perspectives. I apologize, last week I didn't post a video. I didn't have a chance because I was traveling, and but I didn't send out a notice letting everyone know I wasn't posting a video, so I apologize for that. Time just kind of got away on me. So let's just jump right into it and have a look at the markets with fresh eyes, as I said. I have no idea what went on last week, so I'm just going to kind of try and pick up where I left off. It's Sunday. I got back in last night fairly late, so I'm not quite in the zone yet on Sunday. I'm just trying to gear up for tomorrow. Get back into the markets on Monday. So let's just jump into this and start with the Dow Futures. By the way, I also picked up a new microphone. It's more of a studio quality recording quality type microphone, so hopefully the sound is much improved over the last few videos, because I know the quality of the last few videos, the sound was a little bit iffy, so I figured it might be worth it to make the investment in a decent microphone. Since I'll be doing these, I have been doing them for quite a while, since I believe December of last year, and I plan on continuing to produce these videos, so it makes a lot of sense to have some decent tools to work with. So like I said, let's just jump into the Dow Futures. I guess it would be 2 weeks ago now in the video that I made, we were talking about this support level here, and we were talking about some potential downside in the market, and we did get that. I mean, we were holding this major support level around 12,652 in the Dow Futures, and you can see right around here we started to fail that level, and this was the level, if memory serves me correctly, where I said that I'd be interested more on the swing short side. I did believe that we would get some downside down to this level. I think we were trading back in and around these levels. Let's see, around the 12th. The 12th would be right around here. We were trading back in around these levels, and I believe I said that I thought that a test of this level was in order, and then if we broke this level, it looks like swing shorts are in order. So that kind of played out where this was a key level. It didn't hold, and you can see I've been saying for quite a while that I wouldn't really be interested in shorting the market unless we had one of these situations come into play. We broke a major level, right, which we did do, and then you can see here the 20 period moving average and the 21 period moving average are rolling over. You can see this yellow line is the 8 period exponential moving average. Wow, I guess I haven't really been using a mouse for a while, and it really shows. It's hard enough to write with a mouse as it is. So you can see now that the moving averages have rolled over, and you can see we've broken some support levels, and the question's really going to be, are we going to go lower, or is it time to get swing short? Well, this would have been a good level to get swing short under, and you're really looking for the retrace. It looks like you might have had the retrace here. But it's not uncommon. It's not uncommon to get a retest of this level. We could get a retest of that level. I think if you did get a retest of the 12,652 level, which coincides with the first retracement back to the 21 period EMA, I think that would probably be a good level to look at shorting. Initially, those are my thoughts. Now, it's not uncommon to get a retest of these breakdown levels. It looks like we have some support coming in and around here. This is a kind of an accumulation bar here where, obviously the market wasn't really interested in selling it below that level, and it started to buy it up from that level. So I'm going to mark that level with a green, let me just see here, a green horizontal line because I think that's a pretty key level. It looks like a key level, at least in the near future, a key support level. We'll make it a little bit thicker just to give it some importance. So this level here is around, this is just loosely drawn, but this is around 12,300. I'm just going to make the text a little bit bigger so it's easy to see. 12,300. So it looks like we have support at 12,300, and we have, okay, so we have support here, and we have resistance around 12,652. So you've got about a 350 point range. So I think a move back into this level would make a lot of sense. If you want to establish a swing short with, a stop potentially, a fairly tight stop to see if it's going to work. That, I mean, if it really breaks above, if it really closes above 12,652, then bets are off on the short side. Then it won't really make sense to stay short below or above rather. It wouldn't make sense to stay short above 12,652. So you could probably place your stops fairly tight there and see if it's going to come back up. This might have been the retest here. You might not get a retest back into that level, but if we get a day of strength on Monday, tomorrow, Monday the 28th, then it might make sense to look at letting it hit that level, signs of weakness where it's rolling over on an intraday chart, and then establishing a short potentially with a fairly tight stop. That's kind of what I'm looking at there, and looking to see if it will kind of roll over, come back. The first target would be the easy target would be a retest of these lows at 12,300, and then to see if we can kind of break those lows and go a little bit lower. So that's initially what I'm looking at. Now let's take a look at clear off the screen here. Let's kind of zoom out on the chart and see where we are in terms of some Fibonacci's from the major high to the major low, and see if that will give us any clues as to what is going on. So let's throw some, oops, apologize, I'm a little bit slow today. I've been away from the computer, away from everything really. Price retracement lines, that's what I'm looking for. So let's, this looks like the last major low, and we can adjust these. So let's look at the high to the low, somewhere around there. So you can see here we had a 50% retracement. Okay, this is interesting. We had the 50% retracement from that high to low, and we didn't go below the 61.8% retracement. So you can see we're in this zone here, this decision zone rather, and you can see now we're kind of holding the 50% retracement. So you really, I mean, in order to really get something going on the downside, I think you need to see it fail this 61.8, which is around 12,229. So at this point in time, a bounce makes a lot of sense. You can see we had an initial bounce, and this was probably the fib players coming in here and initially buying this zone. So it's not uncommon to get, when you get a move like this with a fairly major fib level, it's not uncommon for, the fib type traders to come in here and buy the first test. Now the question is will that test hold and we push higher, or are we going to push lower from there? So I think it makes sense here to look for an initial short, and then if we get a close, above here, then you just, close out the short and move on. If we get a move below this level, I think we're going to start getting some follow through below, the 12,300, 12,229. That's really the key level to break. That range there, that zone between 230, let's say, and 300, in order to get more on the downside. So this is looking fairly interesting. Now you've got normally what I would do in order to look for a target, using this reversion to the mean type approach, or these type of charts that we're looking at, normally what I would do is I would say, okay, the distance between what we'll call this pivot point, you've got this pivot point here at 12,652. Let's do some dirty math here. 652, and then the high is around, geez, let's call it 272. 272. Okay. And then what we can do, actually, let's just pull up the calculator here. Let's pull up the calculator, and we've got, okay, let's see, 652 minus 272. So that gives you a range of about 380 points. So the breakdown, just so you know what I'm thinking here, we're looking for roughly, potentially 380 points of downside from this pivot point. So 380 points. Let's just, okay, 380 points. So remember that number here. So from 652, oh, I'm sorry, I did the math wrong there. I apologize. It's 13, let's call it 13,272 minus 652, 12,652. Okay, it's 620 points, my bad. So what we're looking at then is we're looking at the range from this high, which is about 13,272, down to this pivot point, what we'll call this pivot point of this. This is kind of like a double top, right? So if we're looking at projecting the range downwards, we're looking at this entire range here. Okay, we're looking at this entire range here. It's about 620 points. So if you take well, we can do the math easy. 12,652 minus 620 points. That would bring us down to about 12,032. Okay, 12,032. So let's take a look at that and see where that brings us. Now 12,032 is down somewhere right around here. This and that, that makes a lot of sense because this is a fairly key support level here. These swing highs. So I think in terms of looking for a target, I would look at 12,062. So make a long story short, and I apologize for that long explanation, but you can kind of see how I'm thinking this through. What I'm thinking is the failure of this double top pattern, projecting the range downwards from here, would bring us somewhere down into this area here, okay? 12,062. It's more like 12,032, but this would be, I would want to get in front of it and get out around 12,062. So basically what I'm expecting to happen if we follow through with this is that here's your major support level. We've already had that marked on the chart. You get this first retest of the 21 EMA back into this resistance level, and then you kind of, boom, come down here. There's your target right there. Okay, so to me that makes a lot of sense. Selling the first retracement back to the 21 EMA somewhere in there. Stop above here. Okay, so your stop would be somewhere up here. And then your target, your ultimate target would be right around 12,062-ish level. So I think that makes a lot of sense, and then we'll kind of see from there. I don't think it makes sense to try to figure out what might happen beyond that point. We really need to see, if we start getting closes above the 21 period moving average and this 50% retracement holds, then all bets are off, and then we'll have to reevaluate. But this is what the market's looking like on the short term. I think this is going to be a fairly major resistance level. So the short side, even though we're still, blue over here on our trending indicator, we've lost a lot of momentum, would make sense for this to kind of roll over to the downside and get some downside movement with a test of this level. I'd be expecting a bounce off of this level. I'd be expecting a bounce off of that level and then kind of reevaluating where it looks like we're going to go from there. Now, we didn't really get, this might have been the test of the 20 period moving average. It doesn't have to be an exact move into there. And if we actually look at some of the other charts, it might give us a better indication of, you know, what's going on. Like if I look at the 60-minute chart, you can see that it kind of hit that level there, and now it's starting to roll over. So this might have been the entry point here. But you know, if you're patient, you could probably wait for the next move back into that level, you know, where you're going to get that move into the 12,062-ish level. Now, it might not be exact, obviously. Let's just look at that. Yeah, I mean, I wouldn't be surprised to see a move right back into this level. That would be this would be the safe entry to get short right in here, where this resistance level here, you know, this was a major support level here. Once that support level is broken, you know, it's the old you know, saying that support once broken becomes resistance. Now this is your major resistance level, and look for a move into that, and then ultimately a move down into this target. So I hope that makes sense. Any questions, you know, feel free to email me. And send me a message through the Meetup group, or you can email me at, let's see, Dave at market, oh geez, it's hard to write with a mouse, Dave at market trading, wow, this is hard, market trading concepts, CONCEP concepts.com. Okay, if you have any questions about that or you want to discuss it, feel free to send me an email at dave@markettradingconcepts.com. I hope that makes sense. We'll take a look at this from the Darvis squeeze perspective and see if we can get a little bit more insight as to you know, where things are going. Okay, let's take a look at the Darvis squeeze perspective on the Dow Futures. Let's start with the weekly chart. See if we can, you know, gain any kind of insight here. You know, there's really not much going on here, except that, you know, we broke this Darvis box, we broke the 21 EMA. This was the major support. These levels are kind of coming together on the different time frames. You had the Darvis box support, 21 EMA support somewhere around 12,663. So that is very close to our 652 level on our other chart. So I mean, those levels are close enough. They're within, you know, 10 ticks. So you can see here we've got red Hakanashis. You have a MACD crossover here, histogram crossover. You're still net bullish. You're still net bullish on the trending indicator, but those typically take a long time to turn. So if you look at the range here, if you look at the range of this Darvis box here, let's just see here, clear this off. The range of this Darvis box it's roughly the same idea. So what we'd be looking for is the movement, you know, the ultimate target to be, you know, project this Darvis box out on a one-to-one basis. And by doing that, that brings us roughly down to here. Okay, that brings us roughly down to here just by eyeball. And that is around the same level that we talked about on the other chart. So from the weekly perspective, we don't really have any signals. But if you look at this movement here, it wouldn't be uncommon for this to move, you know, this distance down. So I think that the analysis there is kind of the same. You can see on the weekly chart, we kind of had a move, you know, where it came up and it closed, you know, more than at or around or a little bit more than 50% off of its highs. So I think the downside still makes sense down to this level. And like I said, those levels come in around the same. They're around 12,000 and call it 62, 12,062 down here. So that makes a lot of sense there on the weekly Darvis squeeze kind of perspective. Okay, looking at the daily chart now, you know, we don't have any fresh signals, but we do have, you know, a couple of other indications that are lending support to, you know, to our other analysis, our previous analysis. You have red Hakanashis here. You can see, wow, look at that. You can see the volume is kind of picked up from the average volume here on the downside, which kind of supports, you know, which kind of supports the you know, the downside, that's where the pressure is. You've got the MACD cross below the 0 line and it is negative, and you have, you know, the trending indicator here in your favor as well. So everything still looks negative. You know, you have the support here, and you really need to break, you know, that support. But I think it does make sense. You know, the story here of, you know, coming up into this level coincides within 2 points of the previous level, and coming down, retesting the lows, and looking maybe if you're in a multi kind of size position, like multi-unit position, you could look at this as a first target. You know, the retest of those lows, and then bring your stops down, trail your stops down, and see if you're going to get movement beyond that level. I think that makes the most sense to me at this point in time. Okay, let's take a look at the S&P futures. Let's look at the ES contract now. You can see here you had the weekly story. I think looking at the weekly chart here is, I mean, it's the same kind of story here. So I'm not going to focus on that. Let's jump over to the daily chart and let's expand the daily chart out. And I think what the daily chart is telling us is we had, we had this Darvis squeeze fire in and around here, and I don't remember if I covered this in one of the last videos, what date this was. So you had a Darvis squeeze short fire in here. The target was already met. We slipped below that target, and now we're right around that target. I wouldn't be surprised to see a little bit of a bounce from there. Everything here is net negative, although the MACD is it's awfully buried down there, and it wouldn't surprise me to see it kind of roll up a little bit and come up here and then, you know, do one of those. So, but I mean, net everything still looks, you know, you're losing a little bit of momentum here, but everything still kind of favors the short side at this point in time on the daily chart of the S&P future. Okay, now let's take a look at the Nasdaq then and see what the Nasdaq's telling us. The weekly chart's kind of the same story as the other indexes are, so it's kind of the same story. Now, this is sort of interesting. Let's look at the daily chart of the Nasdaq from the Darvis squeeze perspective. What you have here is you had a Darvis squeeze fire here. Okay, you had this Darvis squeeze fire here, target met. Okay, and then now it's starting to bounce from there, and now you have a new Darvis box forming. So what will be interesting to see is, now this is basically your Darvis box here, right? What will be interesting to see is, are we going to be contained within this Darvis box, or are we going to, you know, push lower and then break out to the downside? So that looks kind of interesting. A retest of the 21 EMA would kind of coincide with the trend line in the top of the Darvis box at this point in time. So you've got a little bit of confluence between different indicators, and it'll be interesting to see which way that goes. If we develop another squeeze, you know, if we develop another squeeze and then a Darvis squeeze forms, I'd be interested in taking that for a target, you know, somewhere on a 1-to-1 risk reward. So you know, the width of that box ultimately. So that to me makes a lot of sense with a stop above wherever the swing high is. It looks like at this point in time the swing high might be here. If it starts pushing down, here's your swing high. If we come up here and test this level and then roll over, your swing high will be right around there. So it's the same kind of story. It's the same scenario, the same story as the other markets, the other the sister stock indexes. Okay, let's have a look at the transports. I'm going to focus on the weekly chart, because I can see here on the weekly chart of the transports here, we have a squeeze with a potential breakout forming here. So let's expand out the weekly chart, and it looks like we had, let's see. Now it's showing a squeeze with a potential breakout, but the chart indicator is showing that it printed an actual signal here, because when it broke out, you know, this was a valid signal here on this last week when it broke out. So we didn't quite hit the target, so there's still some potential downside, but what it looks like is it looks as though we broke out. Let me just expand this. It looks like we broke out there, we printed a signal, and then we came back up, and now we're just retesting that. So at this point in time, the breakout point and the 21 EMA on the weekly chart is the resistance level, and what we need to see if we're going to get some follow through back down to the downside. This looks like it's ready to roll over here on the trend. This is still holding support above the zero line, but it has rolled over. So if you get a break below the zero line of the MACD, that will kind of lend credence to the the downside. We're in a squeeze. We should get some movement. Hakanashis are red. So I mean, you've still got a valid signal in play here on the weekly chart with a short target on the transports right around 47.49. Right now it looks like they're trading around at the market close 5,079. So you've got some potential downside there. I'm still leaning towards the downside. Now Monday may be an intraday long side trading day. It's quite possible. And that would just be kind of a long side, potentially long side intraday back up to resistance. So it might make sense to be, if the market is strong on Monday, it might make sense that, we're going to be looking to play the distance or the air between, where we are now and where resistance is that we've identified on the previous charts on the stock index futures. So, but I would net from a swing trading basis, I'd be more inclined to trade the short side close to the resistance levels, look for it to hit the resistance levels and then roll over. So I hope that all makes sense. I'm going to wrap up this portion of the video for the stock index futures. Actually, let me just take a quick look. Let me take a quick look at the VIX and see if that's telling us anything as well. Okay, so we did have, if you look at the weekly chart, the daily chart fired along. Now, along on the VIX, a long Darvis squeeze on the VIX is, moves opposite of the stock index futures. So basically what we're looking at is a confirmation of the short side. So here's the weekly chart, and you can see here that we had, I'm not sure why that target is so large. Not quite sure why that target is so large. Here was the last valid Darvis box here. So what I'd be looking at here is maybe a move up to somewhere around there. So it looks to me like we've got a valid Darvis squeeze reversal that's taken place, and this would point to more downside in the stock index futures. So I think we've still got some room to move up to somewhere around these levels, which would mean that the stock index futures have some room, to move down still. So that's kind of what I'd be looking at. We're below the zero line here, but and this is moving higher. But I think we still got some movement to come up and hit that target, which would kind of bode well for the targets that we were looking at in the stock index future. So I think that's that's really where I'm leaning towards. Short stock indexes on valid retracements to resistance. So we could get some strength early into next week. We don't really know if we've kind of hit those resistance levels or if we're going to get a little bit more strength into those levels. But at least at those levels you have, fairly contained risk. You can, look at, we're not providing advice, but the way that I would be looking at those markets, if, trading them from the swing perspective is look at taking a short trade into resistance with a fairly tight stop. The risk reward makes a lot of sense. If you get stopped out, that's part of trading. So I'd be looking at the risk reward and saying, is it worth it to take the trade? Yes, I believe it is. It looks like we're going to get a little bit more downside. At least that's what it looks like at this point in time from a technical perspective. So I hope that makes sense. I'm going to wrap up this video, and I'm going to produce a separate video for the currencies and the metals and the grains and all the other markets, just to kind of keep things a little bit more organized. So I hope that helps. We have a meetup coming up this Sunday coming up. So next weekend. It is on June the 3rd, okay, June the 3rd. and it is going to focus on technical analysis part 3. So we're continuing on the series. It's going to last for the presentation is going to last about an hour, and then we'll probably have about an hour or so to talk. It'll start at 11 o'clock at the Market Trading Concepts offices, and we'll look forward to seeing everyone there. We have, I believe we have about 15 or 16 people registered so far. We can accommodate about 18 to 20 people. So if you can't get on the list, then what you can do is just sign up to be notified on the waiting list, and if somebody drops out, you'll be automatically notified. So I'll just bring you to that. I'll just pause the video and bring you to the site there, so you know where to sign up. Okay, so here's the Meetup site here. If you want to register, you can go to meetup.com, Burlington-investment-meetup-idea. I'm sorry, Burlington-investment-idea-meetup. Okay, so here's the site here. Okay, you can, oops. Okay, let's see if I've moved my the spot where my video records. I apologize for that. So you can, basically what you can do is you can come to this site here. If you're not logged in, you need to, let me just log out here. You actually need to join the site. Oops. Let's try that again. Okay, so here's the site. Should come up automatically. Okay. So here's the site. So what you want to do is come to the site. You'll need to join us over here. And then once you've actually joined, you may need to opt into meetup.com if you're not already a member of meetup.com. And then you'll need to join the site. And then what you can do is come over here where it says upcoming meetups. And over here on upcoming meetups will take you over to it will take you over to the page where you can sign up. Now let me just clear this off and log in. Okay, so once you're actually logged in here, I'm already set up automatically. You can see here we have 16 people attending, 2 spots left. If anybody drops out, you can it will automatically opt you in. So the meetups are pretty good. We've been averaging roughly 10 to 15 people per meetup. This one will focus on technical analysis and chart reading part 3. It's an ongoing series that will probably go, maybe up to 6, maybe 6, 7, 8. I'm not really quite sure. We've got quite a bit of content to cover, and that will be rolled into a more comprehensive course once we're done. So if you've missed the first couple of meetings, no problem. At some point we'll be making the content available as a kind of introduction to technical analysis and chart reading course. And then what we'll be doing is we'll be continuing on with our normal meetup schedule. So basically this is going to be a 1-hour presentation, 1 hour of networking. We'll be answering any questions that you have. You'll have a chance to probably meet some of the full-time floor trading members here at Market Trading Concepts at my trading floor facility. You can ask them any questions if you're interested in joining our trading floor facility. We have several full-time members now, a great group of guys and gals, who like to, trade the markets and exchange ideas and share ideas all day. It's, good camaraderie, a good exchange of ideas, and some smart people that work here with us. So I'm going to wrap up this video. I hope to see you next weekend at the Meetup Technical Analysis and Chart Reading Part 3, and I'll look forward to seeing you either at the next video update or at the live in person at the Meetup. Thank you.